Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. So what's happening? Well, a number of brokerages have issued reports on NEO. Goldman Sachs Group reissued a neutral rating and set a $7 price target on shares of NEO in a research note on Thursday, October 30th. Citigroup gave it a $8.60 and set a buy rating for the company in a research report on Wednesday. Bank of America boosted their price target on shares of NEO from $5 to $7.10 and gave the company a neutral rating in a research note on Wednesday. September 3rd, Weiss Rating restated a sell. That's the only sell we got. I don't know who they are. It's WEISS on shares of NEO in report on Wednesday, October 8th. Finally, JP Morgan Chase and Company raised shares of NEO from a neutral rating to an overweight rating and lifted their price target from $4.80 to $8 in a research note on Tuesday, August 26th. The three research analysts had a rated stock with a buy rating, 8 had given a hold rating, and 2 given a sell rating to the company. According to MarketBeat, the stock currently has an average rating of hold and an average price of $6.73. And I've explained all this before. The reason why they're doing that is they want NEO to prove sustained profitability. That's when they will buy in a massive way, and only then they will tell you it's a buy after they've gobbled up enough shares. But we all know they issued their earnings report. It was dynamite. It crushed second quarter earnings, even though they were doing a lot of spending in the third quarter. It's a great indicator and signal of what the CEO said. Fourth quarter that we're in now is profitable. A number of large investors have recently made changes to their position in NEO. Father Finance Advisors boosted its holding in NEO by 148.3%. You guys heard that right. Finance Advisor, Blue Shift Asset Manager LLC purchased a new position in NEO. Headker Wealth LLC purchased a new position in NEO. Seacrest Wealth Management LLC purchased a new position in shares of NEO during the second quarter. And finally, Brooklyn Investment Group boosted its holdings in NEO by 4,297.2% in the first quarter. So a lot of these institutions, like I said, they're going to be buying. Right now, they're not buying in a massive way, but they're buying and they're waiting to see sustained profitability. Just like with SoFi Technologies, just like with Tesla, just like with Amazon, it's the same playbook, because they can't buy until they can justify why they're buying it. I mean the pension funds, the hedge funds, etc., asset management companies, but they're buying. But when I say not in a massive way, I mean like 30, 40, 50 million, like what Warren Buffett did with BYD at one point. So once they do that, then they'll tell retail investors it's a buy after they've pushed the price up. This is why some of us have more shares than what these funds hold. Yes, believe it or not. Some of them have like 20,000, 30,000, 40,000 shares. Some of us have more shares than that. And by what they're doing now is to keep the share price down, to frustrate you, to get you to think that this stock is going nowhere. I might as well sell. And this is what they've done throughout the years. And soon as you sell, some months later, you see the stock flying and re-ratings coming in again and again. You're like, oh my God, what did I do? So some people learn from their mistakes and from history when you realize that you've sold a company with a winning business model too early. And when I say too early, it doesn't mean like now. It could mean when the company is proving profitability quarter after quarter and you selling in the $20 to $30 range, not understanding where the company, not the stock, is going and what the company is doing, and that it's still in its infancy. This is the problem. You have to recognize. Now, I saw an article where NEO is in talks with Australia, a lot of distributors over there, getting ready to start flooding the Australian market and so many other markets we're going into. Do you think you should be selling now, or you should be selling in the 20s and 30s by next year? No, no, my dear lads. This thing is going to be in the hundreds and up to 1,000 because we're building an empire, sustainable ecosystem. I hope you guys found this video yet again on a Friday to be informational, inspirational, and motivational. If so, guys, boop, 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 don't forget to hit that thumbs up and hype it. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.